Right, welcome back. Thank you for staying with us. Now, Abdi Mohamed is only 3 weeks into his new position as the new Absa Kenya CEO and MD, but has worked within the Absa ecosystem for the past 29 years. Before taking up his new role, he led Absa Tanzania for 7 years. KTN's Noakip Kemboi had an engagement with him, and he started by asking him where he thinks the economy of Kenya is.
I think when I look at Kenya, there is one word that comes into my mind, and that word is resilience. The Kenyan economy has been resilient and has gone through a number of the recent shocks quite well. If you look at the COVID years and all the issues that we had with tourism, with travel, and some of the other sectors, and then that transitioned into the Russia-Ukraine issue, the impact it has had on energy prices, the inflation environment globally, including in the US, which has experienced 40-year highs in inflation. When you look at how Kenya as an economy has managed through those transitions over the last couple of years, the word that comes to mind is really resilience. Even today, when you look at Kenya's GDP growth projections for 2023, it's north of 5%. It's higher than the sub-Saharan average by more than 200 basis points. Okay. You look at what's happening to inflation, which had gone to about 9%, now down to 7.9% because of some of the monetary measures that were taken. So it's a globally challenging environment. There is a lot going on that impacts the macro economy of many countries in the world, and you have seen some of the difficulties that are there in different parts of the continent. But I think our economy has been resilient, and I think that there is a real opportunity for us to push through this short-term phase that we are in today. The medium to long-term outlook for Kenya is actually quite positive.
Looking at developing economies where we are, quite a challenging time, to be honest. And resilience, actually, it's sort of, we have no option but to be that. I'm looking at what is happening in the States. The Fed is always tightening. Yes. Locally, we have to think of solutions, G2G, fuel importation, sort of to protect our dollar market. Yes. When do we have a reset? When do we have a reset, not to normalcy, but maybe new normalcy that is a little bit healthier for the markets?
It's quite important, and it's interesting that you mentioned the issue of the Fed rates, because when you look at the global impact that the world has experienced, that Fed rate hikes that happened over the last 2 years, largely to manage inflation within the USA, has had probably one of the biggest impact on developing economies. It has impacted money markets, currencies, and many other things. But the good news is, there seems to be an easing out of inflation, generally, globally. And if that evens out over the next year or two, hopefully we expect that the markets start improving. So there will be no single bullet kind of solution, but there will be easing off and improvement. And in the meantime, I think some of the measures that have been taken, whether that is in the monetary space or some of the fiscal measures that are already in progress, I think are making it easier to ensure that the economy weathers what is currently a very challenging global environment.
Definitely. Challenging global environment. Locally, we've seen also sort of a different dynamic. Looking at banks, the banking ecosystem, you are great investors when it comes to government bonds. You are huge, off-takers of this. And we've seen also a different dynamic in that regard. In fact, numbers a little bit are changing now. People are preferring sort of short-term papers compared to long-term papers. As a banker, why this move in this market?
I think that investing in the treasuries, whether that is the long-term instruments or the T-bills, is a key part of the market. And it's one of the areas where, as you know, banks deploy some of the deposits that we have. And there are many factors that drive that. There is the issue of liquidity, availability of liquidity. There is the issue of the bank's overall strategy with regards to lending to customers and where that sits, at any one time. But the markets continue to operate. The short end is being oversubscribed, but you would have seen a week ago the bond market was also oversubscribed by about 103%. So it continues to be there, and I think it's a key part of the market. And if you are running a bank, it's one of the areas that is available for you to deploy, the funds, and it's an important source of funds for the government as well. So it's an area we continue to play.
What are the key areas that sort of can help the economy to bounce back, especially from a banking perspective?
I think you go back to the key sectors of the economy, and it is very good to see in all the statements of intent that we have seen, for example, in the budget, the proposed budgets and so on, that agriculture continues to be a critical piece. And, with the improving weather conditions, with all the, investments from a government perspective, agriculture is one of the areas that could really be the engine that gets the country forward. Another important area for Kenya and for this region is tourism. And there we are really seeing a pickup there in terms of volumes, arrivals, and potentially that's another area that could drive not just the economic growth, but also has an impact on the currency side of the equation as well. So both agriculture and tourism have GDP impact and GDP play, but they also impact the currency dynamics because you have the dollar inflows that come through that as well. So these are the main areas that I think are going to drive, the economy forward.
And when you look at these global rating agencies, just recently we saw the Moody's also sort of downgrading us. We've seen also previously Fitch also doing the same. In terms of focusing on this sector, do we think we can sort of have a turn? And what does this spell, especially to the global investor outlook into this particular market when we have such ratings?
I think investors look at a lot of different factors, and some of them are really clued in terms of what's happening in the country at a much more detailed level, not just the lag indicators and things that have already happened, but also have information that is of a futuristic nature in terms of what is planned and what is likely to happen. And my experience of engaging and dealing with investors is that the rating agencies is one component, but they look at a much more holistic picture. Of course, one expects that as we move forward and as we deal with some of these challenges, the ratings are annual. Some of them are more than annual. And as we continue, they will pick up some of the new inputs, and hopefully the ratings continue to improve. So it's one input, it's an important input, but there are many other aspects that an investor would look at.
All right. Thank you very much, sir, for your time.